Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is October 30th, 2013, and today I will go over two key crosses going into the day, and that's the pound dollar and the dollar Swiss. Now let's just start out with the dollar Swiss. And with this pair currently on the hourly charts, and as you can see, prices have been pushing down for some time. We have been following this pair closely, and initially we had the count set at 1, 2, 3, 4, 5. Now, the reason we revised the count was because if we take a look at the volume bars located at the bottom, we see that volume has increased in the latter stages of what we have now labeled as wave 3, and the volume is usually highest in that third wave, the extended wave. And also, if we take a look at the wave extensions, we see that prices have found support at that 161.8% extension of wave 1, and then it bounced off from that point. So it made a low of 88.9 and then bounced back higher. So we definitely like the count that we have right now, and we are looking for a 76.4% correction, as wave 2 did that 23.6% move. So we definitely are looking for that 76.4% correction, which would put us at 91.8. So a good place to put targets would be at 91.5. Now, we can just play devil's advocate and just keep that alternate count, which would have us at 1, 2, 3, 4, 5. Then at that point, we're still in that corrective phase. So if that's the case, then we could look to target that 38.2% fib and then that 61.8% fib. So the 38.2 would put us at 91, and the 61.8 fib would put us at our targets right now, which is set at 92.5. Now let's just jump on the 15-minute charts rather. Try to see if we can get a good entry point. Now as we take a look, we just drew the impulses on that last move down, and as we see that prices have been pushing up for this past week pretty much, but we could see a little move to that downside, and then that's what we are looking for. So prices could push that 50 or that 61.8% mark. A good area to look to get long this pair would be at 0.895. So if prices do push that low before it continues upwards, we can look to put our entry limits at 0.895, and then you can tack on a 40 pip stop, which would put us at 0.891, and then targets on this pair set at 91 and 92.5. So we can look to take half off at 91 and the other half off at 0.925, which would give us a good risk to reward ratio on this pair. Now let's just shift gears over to the pound. And with the pound dollar, we initially had this pair labeled at 1, 2, 3, 4, 5, and then this would be the end of wave 2, that larger wave 2. Have been following this for some time and have been calling for that reversal in this pair. We kind of struck out when we predicted that this wave 3 high, what we have labeled now as a wave 3 high, was the end of the move, and then we struck out there, but then we caught it at this level, and then we took advantage again at this level. So right now we're waiting for a price to break below this ascending trend line. Have been trading along it for some time now, and currently it's at that critical level. So we needed to break below. A break below 160 would thus signal other traders to join in to this trade, so we would then be ahead of them within this pair. Now the reason I had changed this and moved the end of wave 2 over here, and that wave 3 high at that point. As we see, prices made a double top, and as we know with the waves, this would have been our larger wave 1. If this is our 2, this would be our wave 1, and then the wave 2, but wave 2 cannot retrace to more than 100%. And although it has not, it came pretty close, but it has not retraced full 100%, but like to keep things simple. So that would just be a truncated 5th wave to give us that 3, 4, 5, and then that larger wave 2. And then at this point, we'll start with the impulses going down for that larger wave 3 of this cycle. Now, as we take a look at the 15-minute charts, so we see that we have labeled as wave 1, retrace more than 76.4% for that wave 2 correction. And then wave 3, that larger wave 3 is currently finding support at that 161.8% extension of that wave 1. So we would have this, have that label as 1, 2, 3, 4, 5, and then we should see a slight correction upwards, but as I stated, this pair retraced more than 76.4%. So we should see at most 23.6. We could even see a 61.8%, a 38.2% correction rather. But most likely I'm anticipating a move towards that 76.4 mark. That 76.4 mark, which is 1.6073. So good area to put entry limits on this would be at 1.607, and then we would put the stops just above that 38.2% mark to be safe. And that also would correlate with a break of this descending trend line. So a good area to put the stop would be at 161.1. So that would be at about a 40 pip, or you can even put a 50 pip stop on that. And as we look as we wait for prices to break that 160 level, then we should see it sell off and push a lot lower from that point. And then that would round out our first wave within this larger wave 3. And then from that point, we look to take advantage of that third destructive wave, the larger third and destructive wave. Now, as we take a look, we're anticipating wave 4 to terminate at this point. So that move down would be at 59.3. So we can either put targets for 59.3, and then we'll look to enter it again on a pullback. And then we look to take advantage of this some more. So that would be, if we enter at 1.607 and then look for 59.3, that's about a 140 pip gain in this pair. Thanks for watching today's video. Any questions or comments, definitely feel free to jump in the chat room. Paul or myself will gladly assist you with anything that may come up. For you guys trading, have a safe week trading, and good luck to you to the rest of the week.